Hey traders! Welcome back to our channel, where we break down everything you need to know about Forex trading. Today we're diving into one of the most crucial aspects of trading: timing. Yes, knowing the best time to trade can make all the difference between a successful trade and a missed opportunity. So grab a coffee, hit that like button, and let's get into it. First things first, why does timing matter in Forex trading? Well, the Forex market is open 24 hours a day, 5 days a week, thanks to the different time zones across the globe. But not every hour is created equal. Certain times see more activity and volatility, which can create more opportunities for profit, if you know what you're doing. When major markets overlap or when certain economic reports are released, we see increased market activity. And that, my friends, is when you want to be in the game. Let's break it down. There are 4 major Forex trading sessions: Sydney, Tokyo, London, and New York. Each session has its own unique characteristics. Sydney session, 10 p.m. to 7 a.m. GMT. Not too volatile, but good for traders looking for lower risk and smaller moves. Pairs like AUD/USD see some movement. Tokyo session, 12 a.m. to 9 a.m. GMT. Here we see more action on pairs like USD/JPY. It's also known as the Asian session, where liquidity begins to build up. London session, 8 a.m. to 5 p.m. GMT. This is where things start to heat up. The London session is the most liquid, with significant volatility, especially when it overlaps with the New York session. New York session, 1 p.m. to 10 p.m. GMT. The New York session is where you see some of the biggest moves, particularly in the afternoon when it overlaps with the London session. Major economic reports are released during this time, creating great opportunities for traders. So, when are the absolute best times to trade? Here are the golden hours you don't want to miss. London-New York overlap, 1 p.m. to 4 p.m. GMT. This is the most volatile period and is packed with potential. Both markets are open, and you get the most liquidity, which means tighter spreads and more profit opportunities. London session, 8 a.m. to 12 p.m. GMT. If you're looking for high volatility but want to avoid the chaos of the overlap, the early hours of the London session are great. Many trends are established during this time, giving you a chance to ride them for maximum profit. Economic data releases. Keep an eye on the economic calendar. Major data releases like the U.S. non-farm payroll, GDP reports, and central bank announcements often lead to significant price movements. All right, now you know the best times to trade. Here are some insider tips to make the most out of these high opportunity windows. Plan your day around key market hours. Set your trading schedule around the London and New York sessions. This will give you the best chance to capitalize on big moves. Use technical indicators wisely. During high volatility times, technical indicators like the Relative Strength Index, RSI, moving averages, and Fibonacci retracements can be incredibly powerful. Learn to use them to time your entries and exits. Keep an eye on news and economic events. News can drive the market either way in seconds. Be prepared for it, or it could end up wiping out your gains. Have a reliable news source and economic calendar. Utilize stop loss and take profit orders. In volatile markets, the price can move quickly. Always have a stop loss and take profit in place to protect your capital. Of course, it's not just about knowing when to trade, but also what not to do. Here are some common mistakes traders make. Overtrading. During off-peak hours, avoid trading during low liquidity times, like the Sydney session, unless you have a solid strategy for it. Ignoring risk management. Even if you're trading during peak hours, not managing risk properly can lead to massive losses. Use proper lot sizes and never risk more than you can afford to lose. Falling for the hype. Don't get caught up in the hype of news without understanding the fundamentals behind it. Stay informed, but always analyze before you act. And there you have it, Timing is everything in Forex trading, and now you're equipped with insider tips to maximize your profits. If you found this video helpful, make sure to hit that subscribe button and ring the notification bell so you never miss an update. Drop a comment below with your favorite trading session, and until next time, happy trading!